Welcome to the deep dive. You know those headlines that scream Tesla earnings, but never quite tell the full story? Well, today we're going to dive headfirst into Tesla's Q2 2025 results and their ambitious future vision. We want to uncover what truly happened behind those numbers and, what it all means. Our mission is to take this whole stack of sources you've provided. Financial reports, news articles, market analyses, even details from investment platforms, and pull out the most important nuggets. We aim to give you a real shortcut to being well informed about where Tesla stands right now and where it's headed strategically.
And it's definitely a broad spectrum of info we've got here. A lot to synthesize for you. We'll be connecting the nitty-gritty of detailed financials and real-time market data with all sorts of analyst opinions, even insider trading activity. Our goal is to help you understand not just what happened, but, more importantly, why it matters. And crucially, how you can approach this kind of diverse information critically, especially when it seems to, well, tell conflicting stories.
Okay, all right, let's peel back the layers then. Tesla's Q2 2025 results. They dropped on July 23rd after market close, and the headlines afterwards, a real kaleidoscope. Some screamed beat, others hinted at trouble brewing. It's like finding two different maps for the same treasure, isn't it?
Yeah, that's a good way to put it.
But as always, the real story isn't usually right there on the surface. It's deeper in the data, and that's where we're heading.
Exactly. So while some of those top-line reports did indicate Tesla beat or was in line with Q2 estimates, you saw the EPS of 0 to 40 cents, revenue around $22.50 billion.
Right, those were the initial numbers flying around.
Yeah. But the deeper dive, it reveals some pretty significant shifts. Net income, for example, plummeted to $409 million.
$409 million, that sounds low for Tesla.
It is. To put in perspective, that's an astonishing 82% drop from the quarter before.
Wow, 82%.
Yeah. And this isn't just, a slightly off quarter. It marks Tesla's largest quarterly revenue decline in over a decade.
A decade, okay, that's serious.
It is. It contributes to profits falling, sales declining. And looking at profitability, the gross margin also shrank. It's down to 17.48%, which is, again, notably down from a year ago. This signals maybe a need to reevaluate their core business dynamics.
Okay, so we've seen the raw numbers, big profit drop, biggest revenue decline in ages. But numbers alone, they rarely tell the full story, do they? What truly pushed Tesla into this unusual territory? Let's talk about the specific headwinds they're navigating, because understanding those seems key.
Definitely. Several headwinds are absolutely at play, pushing those numbers down. Elon Musk himself noted that recent cuts to U.S. government support for electric vehicles might result in challenging quarters ahead.
Which, coming from him, could mean anything, right? But it definitely sets a cautious tone.
It does. It sounds like an understatement, perhaps. And beyond that, you've got profits being pulled down by diminishing revenue from regulatory credits.
The ZEV credit.
Exactly. Those payments other automakers make to Tesla for their unused emissions allowances. They used to be a pretty significant contributor to the bottom line. Not so much now, it seems.
Right.
Furthermore, the company reported new tariff costs. That just adds more financial pressure. And it's not just Tesla. The broader market is seeing a bit of a slump. European car sales declined in June.
Right, the macro environment.
Yeah. And even a key supplier for Tesla, STMicroelectronics, they make chips, recently posted a surprise loss and warned about uncertainty.
Ooh, supply chain ripples.
Could be. It definitely adds another layer of complexity to manage.
So, given these pretty significant challenges you just laid out, it really begs the question, how is Tesla responding? Are they just trying to weather the storm, or are we seeing a strategic shift? Like when Musk calls robotaxis the real story, is that vision or maybe a bit of distraction from the immediate pressures? Where's the company actually placing its big bets for the future?
That's the crucial question, isn't it? Despite the current difficulties, Musk is heavily emphasizing two key future pillars. It's almost like he's saying, look past the present mess.
Okay.
The first one, as you mentioned, what he's boldly called the real story for Tesla, is robotaxis and autonomous driving.
Right.
Now, this isn't just about launching a new service. It really represents a potential pivot from mainly being a car maker to maybe a software and services giant. They're aiming for recurring, scalable revenue. That could fundamentally reshape how the company is valued. A very big if. If they can navigate the huge technological and, importantly, regulatory hurdles.
Okay, so robotaxis is pillar one. What's two?
The second pillar is the more affordable car. We've heard about this for a while.
The Model 2 or whatever they end up calling it.
Exactly. They're saying initial versions are being built, and production is planned for 2025.
Still a way off, but okay.
Yeah. And additionally, Tesla plans to start onshoring battery products this year, bringing some production closer to home. So these initiatives, they represent a clear focus on future growth areas, even while navigating the current choppy waters. It signals a long-term strategic play.
Right, so you've got these immediate headwinds clashing with these very ambitious, almost sci-fi level future bets. How are people in the market actually viewing Tesla right now? Because our sources show a real mix of perspectives. Analysts, insiders, sometimes it seems like they're looking at completely different companies.
It's a very complex picture. You're absolutely right. There's no single consensus here. On one hand, we've seen a clear trend of analyst downgrades recently. Major firms like William Blair, Robert W. Baird,
Yeah, I just
Argus,
saw this.
they've shifted ratings from things like outperform or buy down to neutral or hold in the last few months. And price targets have also been adjusted significantly, some quite a bit lower.
Okay, so analysts are getting more cautious.
Some are, yes. However, and this is where it gets interesting, when we look at technical analysis from some other sources, they currently show a buy rating for today, even a strong buy for the one-month outlook.
Really, despite the downgrades.
Yes, despite the aggregate analyst rating still sitting at neutral, it truly highlights those conflicting viewpoints we talked about. Very different ways of assessing the stock.
Huh. Fascinating. What about insiders? What are they doing?
That's also insightful to look at. Over the past year, you see Tesla's CFO and several directors pretty consistently exercising stock options and then selling a portion of those shares.
Is that unusual?
Well, exercising options and selling some is a common practice, especially for compensation. But the frequency here is, let's say, notable. Might suggest they don't expect a huge short-term jump, perhaps. Hard to say for sure.
But not all selling.
Not all selling, no. And this is important on the other hand. It's worth pointing out that one director did make a significant purchase of shares back in April 2025.
Okay, so even insiders have varied confidence levels.
Exactly. It illustrates that varied confidence perfectly.
Yeah.
And this is precisely where good investment research platforms, the kind of often praised by places like Forbes and Barron's, become invaluable. They aggregate all this stuff, analyst reports, track insider activity, present technical indicators. They help you cut through the noise we've just been discussing.
Right, to build your own informed view.
Precisely. For instance, one feature mentioned in our sources, the ability to see individual analyst ratings history on platforms like, say, StockRover.
Yeah,
They can really illuminate why opinions might be shifting over time.
that makes sense. See the trend.
Yeah. It lets you make more sense of this complex landscape.
Mm.
And just to add another layer, Tesla also shows up on these curated watch lists as both a famous meme stock,
Ah, yes, the power of Reddit.
indeed,
Yeah.
driven heavily by social sentiment, retail investors, and also as a political stock, often influenced by government policy shifts, public debate around EVs. It just emphasizes the diverse and often conflicting lenses through which the market views this particular company. It's not just about financials.
Wow. What a deep dive this has been. So we've seen Tesla grappling with these significant short-term financial headwinds, a tougher market for EVs overall, leading to falling profits and sales, even as it keeps pushing forward with these incredibly ambitious long-term goals. Robotaxis, cheaper cars. It really feels like a company at a major crossroads, doesn't it?
Exactly. I think this deep dive really shows how misleading just looking at surface level numbers or one set of headlines can be. You really have to blend those hard financials with the, let's call them qualitative factors like Elon's long-term vision, however ambitious, and the shifting market sentiment. You need both to get the full picture.
Right.
It's truly a masterclass in why you just can't take one piece of information at face value when evaluating a company as complex and, frankly, as talked about, as Tesla. Critical thinking is key.
Absolutely. So for you, our curious listener, here's maybe a final thought to mull over. Given these really divergent views on Tesla, the near-term struggles versus that huge long-term robotaxi vision, how do you weigh the impact of visionary leadership, maybe even hype, against cold, hard, immediate financial performance when you're evaluating a company's investment potential? Something to think about.